Good. You come up and share a few words with me.
Thanks, Greg.
Yes.
I'm sorry. I also have a house in Greg's area.
Yes.
Not quite Asheville, for those of you that may be familiar with that area. It's Maggie Valley. I don't know if you know that.
Yeah.
Beautiful area, and Greg's right. We do less sweating up there, and you know, it's just a gorgeous place. But I am a permanent resident here and have been since I came down in 1964 to attend the University of Miami, and then decided to go in the insurance business and started a family business under my name, Gelbwaks Insurance, here in Plantation. And my wife is with me, and both my daughters and son-in-laws and sister-in-laws, even my ex-son-in-law, believe it or not, works for our firm. He reports to his ex-wife, and somehow or another we made that work out. Before I tell you a little bit about what Greg was just referring to in reference to another possible solution to this issue, I just wanted to relate to you that I have also been involved personally, and currently am involved personally in caregiving, and have unfortunately had a number of long-term care events take place in my family. So it's not just that I'm here to talk to you about insurance. I'm here to tell you that this stuff does actually happen, unfortunately, as you know, and it does happen to good people, and I got involved in it some 20 some odd years ago on the long-term care insurance side because of an experience I had with my mom. My mom had 16 surgeries, and she had, believe it or not, almost 60 hospital stays, 5 broken hip operations, and emphysema and cancer and heart problems and manic depression. And we spent about $250,000 to take care of Mom before she passed away. And that experience brought me to this issue of dealing with long-term care. As Greg said, it's kind of a rude awakening. It's not stuff that we want to talk about or necessarily want to face, but it's a lot easier to face it at this point than it is to face it at the point that when you actually need the care. My mother never could qualify for long-term care insurance, so we did have to self-fund for that event. And fortunately, we were able to do it. But it did make a big difference to us. I was one of those baby boomer, you know, I'm the first year of the baby boomers, 1946. I just turned 60, and I had children going to college and one getting married at the same time. I was trying to support my mom. My dad had already passed away. Fast forwarding to today, our experiences with both my mother-in-law, who lives here in Sunrise, and actually she's over at Classic Residence by Hyatt, and my wife, who's 57 years old. And my mother-in-law is, God bless her, she's going to turn 90 in a few months, and she's still out coming to as much as she can, but we've just gone through $200,000. Now, the fortunate part of this story is that in both my mother-in-law's case and my wife's case, we were fully insured. We learned our lesson from the experience we had with my mom, and we were able to get both my mother-in-law coverage many years ago and my wife insured over a decade ago. And unfortunately for us right now, this is the 15th week tomorrow that we're experiencing a long-term care event for my 57-year-old wife who had major cervical surgery here at Cleveland Clinic and had complications and is needing ongoing care as we speak right now. So I'm not just up here to talk to you about insurance or the different products. Certainly we can answer any questions that you might have, but I have been living and breathing this. I've also been helping companies develop products that make sense. Now, the product that I'm about to tell you about will not necessarily make sense for everybody in the room. It's just one option. Greg mentioned about the Cash program. That's the program we actually have for my wife, and it's working very, very well. It gives us total independence. We are not told by anybody who she uses as a caregiver. We're able to just get a check and make that decision, and that's a wonderful opportunity. It does happen to be a somewhat pricier program than the regular reimbursement plan, and those of you that raised your hands, you probably, I would assume, have the traditional program that reimburses you for actual services being provided by a home health care agency or a registry or an aide or a therapist and so forth. And those are two of the options, certainly. Another option that he did not mention is self-funding. For those of you that feel that you are comfortable enough to do that, that might be something that you either plan to do or that you end up doing just because you didn't plan, and there goes $200,000 or $300,000 or $400,000 out the door. And then there may be a few of you in the room that are depending on the Medicaid system or Medicare to pay for those costs. And we can talk about that if we have time, but Medicare was never designed to do that. Medicare is a plan designed for acute care or hospital stays and doesn't really have much built in for long-term care. And Medicaid does, but it's presenting, as we go each year, more and more problems for people to just depend on the Medicaid system, and it's becoming much more difficult to do so. This last program, as an option for those of you that are 80 or younger, down to 30 years of age, is a life insurance policy. And it's a life insurance policy being offered by one of the major insurance companies in the marketplace. That's Lincoln Financial Group. Lincoln National, a subsidiary of Lincoln Financial, is an A-plus top-rated carrier. It's a company that's been in the business over 100 years and has multi-billions of dollars, not millions, billions of dollars in assets. And they've come up with a very unique program to satisfy the issue of long-term care. And what they've done is they've combined a life insurance policy. In this particular case, they're utilizing a plan called Universal Life, and they've combined it with traditional long-term care insurance under one roof, under one contract. And you have one premium to pay, one single premium. And the uniqueness of this plan is that your premium that you're paying is guaranteed by the company to be refunded to you if you ever request it at any time in the future, anytime. So it's a forever free look, as opposed to a 30-day examination period or a 60-day traditional examination period that companies have. This company is saying if you ever want all of your money back because you don't believe you need to use the plan, and you didn't die, obviously, so you didn't collect, or your family did not collect on the life insurance, and you're not utilizing the long-term care benefit, you can ask for a full refund on a guaranteed contractual basis at any time in the future. It may be hard for you to believe. The folks we talked to yesterday, that was the one comment that we got, is that how could that actually be? Well, it is a fact. We do have literature for you. You can certainly do your due diligence on it, and we'll be more than happy to share that with you. But that is a contractual obligation of the company that if you ever change your mind anytime in the future, there is zero risk. Yeah, sure.
One of the ways that the company can operate that way is because while the years that they're holding your money, they're using it.
Right.
They're just saying, we're going to use your money, and if you choose to want to get it back, we'll give it back. So that's how they're able to do it.
They're also convinced the quality of the product is such that the great majority of people will not take advantage of that offer. They certainly have the ability to pay it. They've got the assets and the ability to pay it. But the point is, I'll give you an example of someone 65 years of age. Don't hold me to these numbers, because each and every one of you, if you ask for information on this, is going to be different than these numbers.
So they're going to check your spelling.
It's based on your age at the time, your health at the time, in this particular case, whether you're a smoker or a non-smoker, and there's a lot of factors. But I'm going to give you an example of someone that would put $100,000 into this contract, move over some assets from a CD or a bond or other investment. Okay, and they put this $100,000 in. They're 65 years old. They're a female in good health, and that $100,000 instantly creates $166,000 worth of life insurance, a tax-free death benefit, probate-free death benefit for your beneficiaries. Okay, is everybody with me on this? So that's the first part of it. It's a basic life insurance. That life insurance, whatever that amount is on the contract, is fully guaranteed by the company. There is no ifs, ands, or buts. It doesn't matter what the market's doing. It doesn't matter what the interest rate is. The death benefit's fully guaranteed at the same time as your principal. In addition, on that particular example, there's $500,000 worth of long-term care insurance coverage with no rate increase possibilities, benefits that are going to come to you on a tax-free basis. Tax-free, guaranteed long-term care insurance coverage of $500,000 for that $100,000 and $166,000 worth of life insurance. And the ability to withdraw this money if you choose because you felt you didn't need it at some later point. A very easy process of underwriting.